And now, that was fun. By the way, I've always wondered, how do people at Yahoo call Googling? If someone can tell me, please drop me a tweet. Now, we'll be moving on to the last session for today, and Tim already mentioned it, that banking has a little bit of a hiccup, or minor issue. It's called Reimagine Banking, Fintech in Europe. And this is the part where I hand over this beautiful stage to our very own moderator for that session. Boys and girls, I'm happy to announce from the company Speedinvest, Stefan Klestil. Welcome on stage, Stefan. Stefan, there you are. You got me wondering. High five, my friend. Oh my goodness, you got it. And could we have some applause, please? Oh yes, stage is yours.
Okay.
Take care.
Thanks, Daniel. I'm Stefan from Speedinvest. This is going to be really hard. After Tim Draper singing and Christian Kern doing high fives, we're now in the world of fintech. I do have a disclaimer to make at the beginning. This is the first time in my life I'm wearing Converse. I was forced to wear them by my colleagues from Speedinvest. Okay, so I hope you appreciate that. All right, so the topic is fintech in Europe, and we also want to look at the topic big data in fintech. And we'll kick it off with Valentin Stalf from number 26. Give him a hand.
Great. I think it's going to be really hard after the great singing performance. I'll not try to sing, but I'll tell you a little bit about Erki, what we do at number 26 and how we think about banking and how we think we can transform banking based on a lot of data. So today, if you look at the different areas that are kind of in connection with your daily life, you have seen all these areas, all these industries being disrupted by different companies. Most of them you might know. But if you think about retail banking and banking, which is actually the core of your life, I think not a lot has happened there throughout the last years. And if you think about you, yourself, and everything you're doing, the best picture to get a sense for what you're doing, what you like, what you don't like, is actually your bank account. Still, not a lot has happened. So if you look at products that are out there, most of them are looking a little bit like this, or a little bit like this. So very complex, not very user-centric, and very, very old-fashioned. The question is, why is it so difficult to construct a great product in retail banking? And I think the main difficulty is actually this. It's actually that most of the traditional players don't really get the problem. And it's like, you calling your grandma, you explain to her how you build a great website, but she doesn't even know how to open the Internet Explorer. So if you think about how the relation between someone having a bank account and the bank has changed over the last years, traditionally, maybe you had contact to your personal bank advisor 2 times a year. Maybe you had it 3 times a year, but it was very personalized. So the guy maybe knew your birth date, he knew about what you were liking, but obviously that's very hard to scale, and it's very hard to put a product to work that is cost efficient. So what has actually changed is, for example, at number 26, we are collecting around 1 billion to 2 billion data points this year, along with our user base. And you have a lot of technology that is actually supporting to work with that with that database. So you have scalable machine learning algorithms that you can use. You have descriptive and predictive analysis that you can use. And actually, you have enough computing power that is in the cloud that makes you enable all these data that you're collecting and producing smarter banking. And I think that's what it is about. So banking is all about getting data and knowing your customers. And that's what we're trying to do. So I give you a little bit of an overview of a couple of products and how we think about that. So I think when we talk about smarter banking, it's really about recommending the right products at the right time. So if you look at the German or Austrian market, most of you are investing very traditionally, or maybe they have a savings account. Investing in shares is very uncommon. So I think there's a lot of opportunity for a lot of people to explore things. But if you think again, back on the websites from traditional banking players, you will see everything is very complex. And I think you as the users, you're interested in reduced complexity, especially in a very difficult surrounding like banking or your financial decisions. So what we're actually building, and the first step what we're building is smarter banking. So that means we're also building a marketplace for financial products, and we try to show you opportunities. So maybe we know that you are earning much more than you're spending, and we recommend you a great savings product. Maybe we know that you're earning less than you're spending, so we offer you credit. But I think that's just the starting point to start with the smarter banking and the recommendation engine. But I think most banks still are just thinking about financial life. But in general, I think the bank account is the best thing to understand you even beyond banking. So if you ask me, what is number 26 going to do in 5 years or 10 years from now? I think it's going to be much more problem solving. So it's maybe that you're traveling to a new city and you want to book a new hotel, and we recommend you a hotel that you've already booked in a different city. So I think a lot of the opportunity to solve problems is still there and is not being taken by traditional banks. And that's what we are a lot working on. So maybe let me show you a couple of things that we've recently launched or that we are launching in the upcoming weeks. I think the first thing is about putting transactions into perspective. So I think in general, a transaction is not just a bank transaction. I think earlier days it was always about being happy that the transaction went through and that there was no fraud. But I think it's all about putting a transaction into perspective. Where have you done this transaction? And actually, in what surrounding was it done? So for example, if I would pay with my number 26 card here in Vienna, and I went to maybe a restaurant for lunch, would already recognize that it was a transaction in Vienna, would recognize that normally I'm living in Berlin, so that is a trip that I've done, so it's not something, I'm not living in Vienna. Then it was lunch. We know that because we know the restaurant, we do text recognition. And maybe we have also recognized that you've bought a ticket for the Pioneers Festival before, so we understand that it's actually the Pioneers Conference that you're attending. And I think it's all about putting that one transaction into perspective. And why is that so important? First, it helps you to take the right decisions. If you look back on where you have spent, so we give you a very nice dashboard where you can see what you have spent. But I think it's even more important if you want to understand how your users are living and how your users are behaving. And if you understand that, you can be much better, for example, at fraud protection. Because if now someone is doing a transaction in Berlin, but I'm Vienna, doesn't make sense. So we can actually block that transaction before it's happening. So that's one example, for example, on what we are working today. Then I think it's all about giving you context. So we have recently launched a function, we call it context cards, Pulse 26 cards, that give you specific insights about your financial life. In that case, it can be a monthly report that you're getting. But we are also sometimes outlining that you have spent 4 times as much the last weekend than you have spent on an average weekend, which might be interesting for you. So actually, we try to solve a very complex financial problem with small hints to improve your spending behavior. I think the newest feature that we're going to launch in a couple of months from now is actually, we're also thinking a lot about your bank balance today. So that's what you get from a traditional bank. We obviously have your historical bank balance, maybe what it was like 2 months ago. And a feature that we're now working on is actually to predict your balance, what is going to be your future balance. And if you understand what your future balance and how your balance is going to develop, obviously, we can support you and make the best out of your financial decisions. So maybe we recognize that you're paying rent for 1,000 euros, but you're also earning a decent salary. And we know your credit worthiness is very good. So maybe we put forward a credit offer to you, so get a mortgage, that costs you the same per month, but enables you to buy your own home. And that's, for example, something that we are very much working on. So I think it's all about putting and seeing banking as something not just being transaction or managing transactions, but about understanding users and showing them the opportunities that they are having. And I think that's going to be the first smart bank account. So we're working very much on launching the first really smart bank account. We're still very early. We have around 160,000 customers that are using our product daily. And we're improving all the time. But I think there's some very cool functions that we're going to launch over the next couple of months. Some I told you about. So can just recommend, if you want to check out more, you can obviously visit our website. And I think now on the panel, we'll hear more about how you can actually leverage that data and what's in for the user in the end. Thanks.
Thanks, Valentin.
I think I'm not staying.
No, du wirst nicht stehen. Thanks, Valentin, Stalf. Most of you might or might not know that Valentin and Maximilian are actually from Vienna, went to Berlin, and are now working on one of the most successful fintechs in Europe. So give them a hand. They're at home here in Vienna. Yeah. So I'd like to introduce you to our panel members. Maximilian Tayenthal is a colleague of Valentin from number 26. We have another Max from the company Fraugster out of Berlin. He will tell you in a second what they do. And Erki from Big Data Scoring out of Estonia, based in London. Erki, show us what you've got.
Thank you. So hi. Most companies have already moved to the 21st century, but as all fintech startups know, banks are not among these companies. So banks are still very much in the Stone Age when it comes to credit scoring or assessing people's creditworthiness. Then this is an area where banks are still 30, maybe 40 years behind the clock. And what does it mean? It means that large client segments all around the world are left unbanked. If you look at Western Europe, the population of Western Europe is around 400 million people. Out of that, 100 million people don't have access to credit. And that's because there is not enough information about these people. It's young people, it's recent immigrants, and if we look at the global population, then we see that globally, roughly half of all population is underbanked. People who should get credit, should have access to financial products, but are actually left out from this sector. And this is exactly because credit scoring is back in the Stone Age. It's still done the same way as it was done 40 years ago. There is a report from the credit bureau, and there is a report from the bank's own system. That's it. We have found a way how to solve this issue, how more people can have access to credit. And that's by using all the available data around us in credit scoring. Let me give you a few examples here. First, pretty much all of us have some sort of social media presence. We know how to use, for example, your Facebook profile or LinkedIn profile or Google Plus profile in credit scoring. So based on social media, we can tell how likely somebody is to default on the loan. Second, back in the good old days, most people were permanently working at some company with a proper employment contract. Nowadays, more and more people are working on freelance basis. Freelancer is the form of working which is hugely challenging for banks to understand. They just don't know what it means. They don't have the proper employment contracts. At the same time, all the freelance world is open there in the wide internet, and we know how to access and use it. Second or third, every person leaves a behavioral track behind in the web. So when you access the bank's web page, then we can use this information in credit scoring. For example, If a person is copy and pasting their first and last name on the loan application, it's obviously a bad sign. Many bank loan applications have insert their income, insert their expenses, and what happens is that people, after inserting the expenses, they realize that the income was too small. Then they go up again, delete the income, insert a larger income. What people don't realize is that this leaves a track that can be used in credit scoring. Then also, when visiting a website, then always there is a device being used. What we have found, for example, that people who are still using the good old Internet Explorer are a lot more trustworthy for banks. People who are accessing loan applications from college networks are on average a lot more trustworthy. So if you really want to get a loan, install back the old Internet Explorer, go to a college network, and fill in the application from there. Then about location. All of us live somewhere, or all of us are located in some physical location when filling in the application. So again, this is a valid source of information for credit scoring. In some places of the world, there is not enough mapping data available. For example, in India, we are looking at the satellite imagery at the night time, and based on the city lights, we can tell which people are more likely to default on the loans. There are government databases, there are statistics offices, and last but not least, there is a strong Google and even Yahoo and Bing, who we are using for searching the internet from wide web. So all of this, using this information in credit scoring, what we've seen is that banks can issue a lot more loans, credit quality improves by at least 1/3, and we are opening up the emerging markets for many lenders that previously weren't able to operate on these markets. That's it. Thank you.
Thanks a lot, Erki. And finally, Max from Fraugster will tell us how he uses big data for online merchants.
Hi, everybody. I'm Max. I'm the CEO and founder of Fraugster. We are a German-Israeli payment security company, and our goal is to create a fraud-free environment for our clients. And the reason why we are doing this is because the payment market is totally fucked up. Yeah? Because especially when you look at the numbers, because online merchants are losing over 14 billion euros to fraudulent transactions every year. But this is just the tip of the iceberg. The fear of fraud forces e-commerce and payment players to install anti-fraud solutions, which are mostly based on outdated technologies. And that's the reason why the results are downright ridiculous. And not that these solutions can eliminate the risk of fraud, they actually make it even worse by blocking too many good customers. And these false positive declines cost the industry, or you, more than 243 billion euros in 2015 alone. So this means for every fraudulent euro, you are losing 17 good euros. And if I would be you, I would ask my payment service provider or my risk team if they are not blocking too many good customers. And to solve this problem, we've invented over the last 2 years an artificial intelligence technology that can foresee fraudulent attacks before they actually happen. So how does it work? So at first, we collect your transaction data. So let's use, for example, an e-commerce merchant. So we collect the typical data, so name, email, credit card number, billing, shipping address. Then we enrich it with thousands of additional data points to get better insights. And then we send everything to our artificial intelligence engine. And instead of relying on a single fixed algorithm like all other anti-fraud solutions do, our engine reinvents itself with each new transaction in real time. So it can translate thousands of data points into clear behavioral patterns, which allows us to understand the transaction and, of course, the customer much better than any other solution. And I know it's a pretty hard topic, so I have a very short and simple example. Let's use, for example, my co-founder, Chen. So Chen is originally from Israel, but he's based in Berlin, Germany. And sometimes he's flying to Israel to visit his parents. And of course, there he has a lot of time to spend time on the computer, and he finds a great deal to purchase a MacBook. Unfortunately, the MacBook is on a UK merchant side, and the UK merchant has to ship it to Germany. So, and what I can guarantee you, to 99%, current solutions are blocking this transaction. So why? Because think about a random guy is coming to your website with an Israeli IP address, and he's using a German credit card to purchase or to buy a MacBook on your site, and you have to ship it to Germany. So probably you get declined. And let's use now the Fraugster technology with the same example, and you will see how much power the engine has. So we would also start, for example, with Gen, but we are looking on totally different data points. So for example, for us, it's very interesting to see, okay, where is this person coming from? So here we, for example, use his name. So this is Hebrew, unfortunately. So this means Gen Samir. And what we are doing here is we are doing an ethnicity check, because what we want to find out is, okay, in what country is this a common name? And what we find out, hey, actually it's in Israel. Then, for example, we take the email address. And here we have a big problem in Israel, because as you know, in Israel you're writing everything in Hebrew. But for the email address, they have to switch the keyboards to Latin letters. So as a human who can speak both languages, it's super simple to understand that Gen is on the left side in the name, but then also in the email address. But how does a machine wants to understand this? So what we did, we built a metaphone check engine. This means this engine translates every language into sounds, and we are doing a sound match. And what we find out, oh, actually, the name Gen, which we have in the name, is also in the email address. And the reason why we need this is because fraudsters are using very often random email addresses, so like ASDF or SexyBob1, SexyBob2, etc. And that's the reason why we built this. The last example is, for example, the IP address. We are not just looking for IP geographic. We are looking also for IP connection. So this means, okay, which organization belongs this IP address? And what we find out here, oh, it's a hotel Wi-Fi. And I think these are just three very, very simple examples. So multiply this with 1,000, and then you have a rough feeling how much power the engine has. And of course, when you look at this transaction, it makes much more sense than the previous slide, because what you see now is that the story is much clearer. Okay, you have a guy from Israel who spends time on vacation in Israel, and he's buying with his German credit card a MacBook, and that's the reason why he sends it to Germany, because he's based in Germany. So we would accept it, and you would earn 2,000 euro more. So, and just to summarize, so this whole process takes us less than 15 milliseconds. So we do everything in real time. And probably you're saying, okay, hey, this is bullshit bingo, because everyone is saying, okay, it's big data and it's artificial intelligence and whatever. But the thing is that customers and also numbers can't lie. So we are very proud to work with clients like Visa, Mövenpick, or Isico. And for them, we are managing currently over 400 million euros, and the results are incredible. By declining just a fraction of the transactions, we could reduce the fraud rate by roughly half. But also, we can increase the transaction volume of up to 22%. So these are 7.5 million euros a month more for our clients. So thank you very much, and welcome to the future of payment security.
Thanks a lot, Max. So guys, we have now 3 brilliant examples of how big data is used in fintech. So in the context of number 26, obviously you help your now 160,000 customer base growing rapidly to make sense of the data, give them contextualized offers. You just told us how you help e-commerce merchants drastically improve their traded volumes and identify false positives. And you showed us how you can help up to 100 million people in Europe get access to loans. So these are all tremendous benefits. However, I think myself, but probably also many in this room, if you think about it, the types and amount of data used from me is quite incredible. So it's a bit scary. The question is, what are really the benefits? Are they so strong that we as customers should accept you using all this data? Maybe Erki, if you want to start.
Thanks. I mean, I think that's the most common question that we get. Obviously, everybody's afraid of the big brother. But when we look at the details, when we look at how the solutions are used by banks today, then we see that using big data solutions actually improves people's chances of getting the loan, and then it gives access to credit for a lot more people. In the UK as well as in the States, people in the old days they still have to do it. They have to build up their credit history for 10 years before they can apply for a credit for a mortgage, for example. And building up your credit history is a conscious decision that people have to do. This shouldn't be like that. I mean, there is so much information out there, and credit score should be something that people have instantly. They shouldn't be kind of worried about it. So they shouldn't think about it. Banks should know whether it's a good person or a bad person. And that's what we are helping banks do.
Okay, how about you guys? Benefits for the consumer to give you all this data.
Well, I think the benefits for the consumer are actually quite high. Think about it if you want to have a credit, like thinking about my own product. You're actually paying an interest rate which is covering, like, obviously profit margin for the bank. It's covering the cost of liquidity, and then obviously it has to cover the credit risk. So you are actually paying, part of the interest rate you're paying is actually for the risk that someone else is not paying back the credit. And if the scoring can be improved by analysis of data, which I have to agree the banks are really not doing a good job in, it's actually very beneficial for the customer. Also, if you think about a little bit what Valentin has presented in terms of tailoring the offer to the customer, to offer them the right product, for example, for investments or savings at the moment they need it, is actually beneficial for the customer. So if you think about it, there is obviously a little trade-off between privacy on the one hand side and accuracy and like how the product is tailored to you. It's the same thing if you look at the search engine. If you have looking at Google, you can actually get excellent results, but they are also using part of your part of your search history. If you look, there's other search engines that are not doing that, but most customers, they prefer the excellent solution compared to a very good solution, even at the cost of some privacy. But we at Number 26, we very much believe into giving the customer the choice. So in the future, once we are using more data of the customer, there should be the possibility for the customer to opt in and get a very much tailored product, or to opt out and have maintained the highest level of privacy. Obviously, the data is always kept private, but in the sense that the data data is not used for tailoring the product to the customer.
Okay, Max?
Yeah, so I think we help the economy in general with our solutions. I mean, why should a merchant lose money? Yeah? Because if a merchant is losing money, and you are employed at this merchant, I mean, how secure is then your job? And of course you can say, okay, this is not politically correct when you block a customer and then another not, but I think the current solutions are much worse. I mean, we are just investigating the transaction much clearer and deeper than any other solution on the market, and I think in general we use the same data. So I think it helps the economy much more, and I think in general we are not collecting as much data as, for example, Facebook, Google, or the other guys. So I think we are the good guys.
Well, if you guys can help us turn off those terrible 3D secure additional verification methods that all of us have been suffering in our lives, that would be terrific. Yeah.
Yeah, I mean, we can ask the crowd. So, who of you knows the 3D secure password? One.
Okay, give us a hand. Who knows his secure Mastercard secure code password? Raise your hand.
So this is the little thing when you book, for example, a flight, and then you get the redirect on a random strange site. So and there you see, I mean, that the conversion loss is in Germany 35%, and in the US it's 55%. So you acquire 100 good customer, and then the customer choose the right product, you choose the right payment method, and then 3DS pops up, and you're losing 35 customers.
So let's talk a little bit about what's going to happen in the next few years. Obviously, big data is going to continue as a trend. And specifically for fintech and for you businesses, if I ask you to really let go your fantasy and just really say, what types of services can we think of in the next few years? If I consent giving you my data, what are sort of the funkiest things you can think of, Erki?
Well, I mean, the whole world of big data, although I hate the term big data, but when we started 4 years ago, then it was very much educating the market. The first meetings that we did, we just had to start from ABC, what's big data, how does it help you? And nowadays, in the past 4 years, we've actually taken a very long journey. So banks, lenders, our clients, they all know the benefits of big data, so it's a lot easier. And I would imagine it continues at least as fast for the next 4 or 5 years as well. So using big data or any other data sources like that in credit scoring, I'm quite sure will become the standard in banking industry. There's no doubt about it. I mean, when we're recruiting new people, all of us go through the people's social media profiles, we Google these people, but at the same time, when we're lending actual money, all of a sudden we just don't do this online investigation anymore. So this will become part of any proper data-driven decision-making, that's I'm sure.
Do you think we'll have one pan-European credit bureau in the next 5 years?
I doubt it. I seriously doubt it. There's definitely a need for that, because at the moment, I mean, I moved to London last fall. I can't even open a bank account, and I don't have a postpaid cell number. So obviously it would help me, but the only way I can help myself is selling the big data scoring solutions to the UK banks, and hence they can serve me this way.
Okay. Guys, any ideas of what is coming down the road, do you think?
Well, perhaps first picking up the point with the credit scoring. Like, I'm actually a bit skeptical that development of usage of big data is going very quickly. If you look at the incumbents, they're actually sitting, like the big banks, they're sitting on the treasure chests of the big data, and they are doing incredibly little things with that. So they have legacy IT systems, they're not really good to actually extract that data. And if you think about, like, I totally agree, you don't have any international credit scoring agency, but they're really very much fragmented. So I think there will be those guys. They have other things to worry about than to do really great things with the data. But I think like out of pressure, like there will be first banks starting to do a little bit more with the data in terms of tailoring their offers to the customer and in terms of improving the risk scoring.
Yeah, I mean, I don't know about you guys here in the audience, but we've been talking about this for a couple of years now, right? And I personally, I've been quite disappointed so far with the specific value adds that I get as a customer. So for instance, why doesn't anyone, when I buy a ski pass, yeah, when I go skiing, and you can see on the credit card it's for 3 days, why don't I get immediately a notification saying, hey, do you want an insurance coverage for skiing or for theft of your skis? I mean, this is so obvious. Why is this not done? Is this just, I mean, it's hard to understand because these things could be done, no?
Yeah, I think absolutely. Like, there's obviously like the ski pass is one thing. Like, I was thinking about, like, you buy something at Apple, like your bank should actually know that you need a device insurance. But it's really, I think it's about the legacy systems of the banks. Like, those systems, they're very good, like, to maintain data, and you can extract certain standardized report out of that. But the banks just don't have the technical abilities to do a lot with the data. And if you look at your own credit card statement, you actually see that you get in most cases you get your credit card transactions with 2 days of delay. delay. Like those guys are very far away from offering like 2 seconds after you bought a new mobile phone or you booked the travel to offer you the right insurance product.
Yeah.
I think in general it's I mean it answers the last question, because I mean we have a lot of data. The question is, how good is your intelligence to understand these? Okay, that you have a ski pass for the next 3 days, and that's the reason why the question is more, okay, when do we have an artificial intelligence or machine learning, or what kind of intelligence that can understand this and can solve this?
Yeah. I mean, really, there would be so many use cases we can think of that one should be able to do already. I mean, I know you guys at Number 26, you're preparing to partner with other fintechs in areas like savings. You've announced a partnership with TransferWise recently. Wouldn't that be an opportunity also to give more contextually useful notifications to your users?
No, absolutely. Like I think also what Valentin's speech was about is that we actually want to bring smartness to the accounts. Like in terms of offering more products to the customer and actually being able to provide them the best savings product, the best investment product, perhaps the best insurance product. I think it's very important for us to figure out when is the right, because obviously you don't want to spam the customer, but when is the right moment, when the customer really needs an insurance, that you actually offer them the product. Or if you know that the customer has, like just in terms of helping the customer, if a customer has 5,000 euros laying on his account and he doesn't do anything and he doesn't earn any interest, why not offering him a savings product that is exactly tailored to his needs? Like just if you think about how my bank is doing it, like probably your bank is the same, like they call me up once a year and I already know they're going to sell me a pension product which is not competitively priced, which is not suited to my needs, which is just one of the products they offer from their from the product family because someone has decided that they want to push this product in this particular week.
So recently I met a great Indian entrepreneur who launched his fintech solution in India, and he calls his product Dreamcatcher. So I mean, basically you see a Pinterest type situation, and you know, you can pick a phone that you like, or maybe a trip that you would like to do, or a motorcycle, and then the Dreamcatcher basically helps you based on your monthly salary to basically set aside a certain amount to be able, after a certain amount of time, to reach your goals. It's pretty obvious. Why doesn't anyone do it here in Europe?
Wouldn't it be great if instead of saving the money, the bank or the lender already knew whether to give credit to you automatically? But the thing is, if the question is why isn't anyone doing it here, it is startups, fintechs are doing it. The case with established banks is that they're so slow that it takes way too much time. When we start a relationship with a new bank, then it's no surprise it might take from the first meeting to the actual commercial relationship at least 2 years. And that's when we are trying to help them. Imagine what would happen, how long time it would take if they did it on their own. So it's just the slow pace of doing things that's holding it back.
So companies like yours, Erki, are going to help banks, or helping banks to actually, you know, catch up with the fintechs in many ways. On the loan side, there's other examples. Predictor from Austria tomorrow on a panel that is helping Erste Bank, for instance, make sense of their information. So how long will the fintechs actually keep their advantage to the banks? The banks are not going to just wait. Maximilian.
Well, generally, there's what I like to say. Like, it's really a lot of things that keeps me worried and keeps me up at night. Like the competition from traditional banks is not among that. I think we all agree that banking and the offers from traditional banks are going to be different in a couple of years from now. But if you look at like I don't want to judge my own product, but if you look at modern fintech products, how they are developing and how little has changed with traditional banks over the last couple of years, like look at the interfaces, still look like the internet of the 1990s. I think I don't expect that the banks are taking over the innovation. And we also, I think Valentin showed a slide about a lot of industries that have been disrupted by startups, by mobile technology, by the internet. Like think about how the way we are consuming music, or the way we are booking traveling, and the way we are reading newspapers, how that has changed over the last couple of years. Look at any of those developments. The revolution has never been driven by the incumbents, but it's actually incumbents that have been replaced by new technology players.
Okay, I think that's probably a good last word. Thanks a lot, guys, and give a round of applause to both Maxes and Erki. Thanks a lot, guys. Thanks.
And of course, also big thanks to you. Thank you very much, my friend. Obviously, you'll be also to all of you, of course. I'm so sorry. I'm so sorry, Sunshine. Thank you very much. Also to the two of them, but they're already. Wow, that was weird talking. Anyhow, it's been a fun first day, hasn't it? So, we're nearly done. I've got 2 more things to do. Number 1 is we have an after-show party starting right about now in the Volksgarten Säulenhalle, which means you just walk right over that square and right into a club, which will be a nice thing to do, but don't get too absolutely thrashed, because we've got an amazing day tomorrow, including, I shit you not, I still think that's pretty much amazing, the man who brought us Wikipedia. Jimmy Wales personally will be on this stage, and of course we'll find out who the winner of the Pioneers Challenge 2016 shall be. In that sense, it's been fun. Thank you very much. Have a brilliant evening. As I said, don't get absolutely shit-faced, and see you tomorrow. Have a great evening. Thank you very much. Bye-bye. And that was decent. Thank you so much.